Let me show you something. Every single quarter, whether the stock market is up, whether it's down, whether there are tariffs, recessions, or full-blown chaos in the headlines, 3 stocks quietly deposit money into my brokerage account. No side hustle, no second job, no landlord headaches, just 3 stocks paying me $4,350 a year in passive income. In this video, I'm going to show you exactly which stocks they are, how much I invested, and why this specific strategy is more important right now in 2026 with the market this volatile than at almost any point in the last decade. Stay with me. Before I reveal the stocks, I want to give you a little context, because understanding why this works changes how you think about investing completely. Most people approach the stock market like a casino. They buy a stock, they watch the price, they get nervous when it drops, they sell when they can't take it anymore, and they end up with less than they started with. Dividend investing flips that entire mindset. When you invest in a dividend stock, you stop caring what the price does today and start caring what the company does. Because every quarter, that company writes you a check. It doesn't matter if the stock is up or down that day, the check still arrives. Now, here's the thing most people don't realize. There is a very specific group of companies, 69 of them to be exact, that have not just paid a dividend, but raised their dividend every single year for at least 25 consecutive years. They're called Dividend Aristocrats. These companies raised their dividends through the dot-com crash, through 2008, through COVID, and they're raising them right now through tariff chaos and a potential recession. Since 1926, dividends have contributed approximately 32% of the total return for the S&P 500. Not price, dividends. Nearly a third of all the wealth the stock market has ever created came from companies simply paying their shareholders. That's not a get-rich-quick scheme. That's how wealth is actually built. Slowly, quietly, reliably.
So here's my setup. I invested $75,000, $25,000 into each of 3 stocks. That gives me a blended annual yield of around 6%, which works out to $4,350 a year, or about $360 a month, just sitting in my account. Now, I know what some of you are thinking. $75,000? I don't have that. That's completely fine, because the same 3 stocks, the same strategy, works at any amount. $10,000 at 6% is $580 a year. That's not nothing. That's a utility bill. That's a grocery run. That's money your money earned while you slept. And here's the compounding magic. These companies raise their dividends every single year. So 5 years from now, without adding a single dollar more, your income from these stocks will likely be higher than it is today. All right, let's get to the stocks. Stock number 1, Hormel Foods. You almost certainly have something made by Hormel in your kitchen right now. Spam, Skippy Peanut Butter, Applegate Meats, Jennie-O Turkey. These are not exciting brands, and that is exactly why I own the stock. People don't stop eating during a tariff war. They don't stop buying peanut butter because the S&P 500 dropped 10%. Consumer staples are recession-proof by nature, and Hormel has proved that 58 years in a row by raising its dividend every single year since 1968. That makes it not just a dividend aristocrat, it's a dividend king, one of only 57 companies on the planet that has achieved that status. My $25,000 position in Hormel generates approximately $1,375 per year, paid every quarter, whether or not I'm watching. Stock number 2, Rowe Price. This one is interesting because it's a financial company, a global asset manager, that manages over $1.7 trillion in assets. Here's what makes Rowe Price different from most financial stocks. Their business model is fee-based. They don't take on lending risk. They don't have a balance sheet full of loans that could go bad. They simply manage other people's money and charge a fee to do it. That predictable recurring fee income is what has funded 39 consecutive years of dividend increases. The most recent quarterly dividend declared in February 2026, was $1.30 per share, up from $1.27 the year before. The stock currently trades at a forward price-to-earnings ratio of just 9 times. For a company with this kind of dividend history, that is genuinely cheap. My $25,000 position generates approximately $1,425 per year. Saving the best yield for last, stock number 3. And this is the one most people haven't heard of, which is exactly why I love it. Amcor. Amcor is the world's largest packaging company. They make the flexible packaging, the bottles, the medical packaging, the food wrapping that surrounds products you buy every day. You've never thought about Amcor, but you have almost certainly touched something they made in the last 24 hours. Earlier this year, Amcor completed a massive acquisition of Berry Global, making it the dominant player in consumer packaging globally. That deal triggered a dividend step-up. Their quarterly payout rose to 65 cents per share in the first quarter of 2026, up from 12.5 cents before the acquisition. The result? Amcor currently yields 6.5%, making it the highest yielding Dividend Aristocrat in the entire index right now. My $25,000 position in Amcor generates approximately $1,550 per year. So let's add that up. Hormel, $1,375. Rowe Price, $1,425. Amcor, $1,550. Total, $4,350 a year. Now here's the part I want you to really sit with. The stock market right now is volatile. Tariffs are creating uncertainty. Inflation is ticking up. JP Morgan has recession odds at 35%. And while all of that is happening, Hormel is still selling spam. Rowe Price is still collecting management fees. And Amcor is still wrapping the world's food. That's the power of this strategy. You stop trying to predict the market and start building a portfolio that gets paid regardless of what the market does. A portfolio that pays you every quarter regardless of headlines is a foundation. High-yield dividend stocks offer liquidity that real estate and private credit cannot match. You can add to a position on a Tuesday or trim it by Friday. That's not a complicated strategy. It doesn't require options. It doesn't require leverage. It doesn't require you to watch a screen all day. It just requires patience and the willingness to let compounding do its work. Quick recap before you go. 3 Dividend Aristocrats. $75,000 invested, $25,000 each. Blended yield of 6%. $4,350 a year in passive income, paid every quarter, growing every year. Stock 1, Hormel Foods. 58 years of consecutive dividend increases, a dividend king. Stock 2, Rowe Price. 39 years, fee-based, no lending risk, trading cheap. Stock 3, Amcor. The highest yielding Dividend Aristocrat right now, 6.5%. Now, I want to be clear about something. This is not financial advice. I'm sharing what I personally own and why, but your situation is different from mine. Always do your own research before buying any stock. If this video gave you a new way to think about investing and passive income, hit like. It helps more people find this content. Subscribe if you want more straight talk on wealth building, dividend investing, and making your money work harder than you do. And drop a comment below. Tell me, do you own any dividend stocks right now? What's your favorite? I read every single one. I'll see you in the next one.